Assalamualaikum to Dr. Farini. My name is NATASHA. So for this video, me and my friend want to present about comparison analysis between Padini Holding Berhad and Rino Group Berhad. For my part, I will present an introduction of Padini Holding Berhad and Rino Group Berhad. Also, comparative analysis and common size analysis for both companies. I will talk about introduction of Padini Holding Berhad. Padini Holdings Berhad is a top Malaysian fashion retailer founded in 1971. It owns popular brands like Padini, BINTI, Sid, and Mickey, offering trendy and affordable fashion for all age. With full control from design to sales, Padini operates stores across Malaysia and abroad, including in Singapore and the Middle East. Listed on Bursa Malaysia, it uses digital tools and omni-channel retail to stay competitive. Padini also focuses on sustainability and ethical practice, showing strong growth and resilience in the fashion industry. Next, I will intro about Rino Group Berhad. Rino Group Berhad is a Malaysian fashion company known for affordable luxury shoes, bags, and accessories. Founded in 1996, it targets young, style-conscious shoppers. The brand sells through stores and online in Malaysia, Singapore, Indonesia, and the Middle East. With trendy designs, influencer marketing, and a focus on sustainability, Rino continues to grow and adapt in fast-changing fashion industry. Next is comparative analysis of income statement for Padini Holding Berhad. From 2020 to 2024, Padini's revenue steadily increased after the pandemic, showing recovery and growth. Net profit rose significantly, especially from 2024 onward, due to stronger sales and cost control. This consistent upward trend reflects Padini's resilience and operational efficiency. Next is Rino Group Berhad. Rino Group Berhad experienced moderate revenue change between 2020 and 2024, while there was some recovery after 2021. Profits remained volatile. Expenses rose in certain years, which limited net profit growth. Overall, performance fluctuated with signs of financial pressure. For comparative analysis of balance sheet Padini Group Berhad, Padini's assets grew each year, especially current assets like inventory and receivables. Liabilities remained stable or slightly decreased, while equity increased yearly. This shows stronger financial health, improved asset base, and growing shareholder value. So for Rino Group Berhad, Rino's Group Berhad asset base slightly expanded from 2020 to 2024, but liabilities fluctuated, which affect financial stability. Equity growth was slower compared to Padini, suggesting tighter cash flows or reinvestment challenge. Next, I will talk about common size analysis for income statement of Padini Holding Berhad. Across the 5 years, Padini maintained consistent cost ratios with improvements in net profits margin from 2022 to 2024. Operating expenses become a smaller percentage of revenue, showing better cost efficiency over time. For Rino, cost of goods sold and admin expenses stay high relative to revenue from 2020 to 2024. Profit margin are thin, reflecting limited room for profitability. This indicates challenge in reducing costs or increasing sales effectively. Next is common size of balance sheet for Padini. Padini's asset structure stays stable, with most assets being current. Equity as a portion of total assets grew from 2020 to 2024, showing increasing financial independence and reduce reliance on liabilities. Lastly is for Carlo Rino Group Berhad. Carlo Rino's common size balance sheet reveals a higher proportion of liabilities in earlier years. From 2022 to 2024, there was slight improvements in equity ratios, but the company still relies more on liabilities than Padini. Next, I will pass to the next presenter.
Assalamualaikum dan salam sejahtera. My name is NIHAYATUL ZAFIRAH. Today, I would like to present about current ratio. Padini consistently held a current ratio above 2.0, showing strong short-term liquidity. Carlo Rino, meanwhile, ranged between 1.4 to 1.8, still considered healthy, though lower. Next, quick ratio. Both companies exceed the minimum benchmark of 1.0, but Padini shows stronger liquidity after excluding inventories. Next, profitability ratios. Net profit margin for Padini recorded 5.55% in 2020, rising to 12.22% in 2023, before slightly dropping to 7.64% in 2024, while Carlo Rino saw improvements, peaking at 13.41% in 2023, slightly higher than Padini, indicating effective cost control during recovery periods. A return on assets, ROA, Padini maintained ROA between 2.72% in 2020 and 7.10% in 2023, while Carlo Rino's ROA stayed lower, though it climbed from 1.56% to 5.80% in its best year. So for ROE, return on equity, Padini show strong shareholder returns, especially in 2022 and 2023, with 24.61% and 23.81% respectively. Carlo Rino achieved a high 22.32% in 2022, but declined after, suggesting volatility in equity returns. For receivables turnover, both firms show a good receivables turnover, but Padini against leads, suggesting faster collection of payments. That's all from me. Thank you.
Padini Holding Berhad and Carlo Rino Group Berhad. Cash flow from operating activities in Padini Holding Berhad showing a positive and increasing operating cash flow throughout the 5 years, indicating strong core business performance, while Carlo Rino fluctuating cash flow from operations, showing inconsistency in cash generation. Next, cash flow from investing activities in Padini, showing a negative cash flow in this section. It is expected as it indicates investment in outlet or systems, while Carlo Rino also negative, but at smaller amounts, indicating more cautious or limited reinvestment. Cash flow from financing activities showing Padini is occasionally repaid borrowings or paid dividends, showing mature financial management. For Carlo Rino, higher inflows from financing in some years, indicating funding needs or expansion move. Lastly, cash position comparison. Padini's overall cash balance increased gradually, shows a strong sign, and Carlo Rino ended with a lower cash reserve, reflecting tighter liquidity. To conclude, in liquidity, Padini dominates with a strong short terms of financial head. In profitability, both companies performed well in 2023, but Padini shows more consistent long-term performance. In efficiency, Padini again shows superior turnover ratios. In solvency, Carlo Rino shows a slightly higher risk due to its greater reliance on debts. Lastly, we recommend Padini Holding Berhad as the better investment opportunity. This is based on its consistent profitability, stronger liquidity, lower debt reliance, and higher returns to shareholders, it represents a stable and financially sound option. And for Carlo Rino Group Berhad, it showed a strong improvement in 2022 until 2023. Its financials remain more volatile and riskier from an investor's perspective. Thank you for your attention. This concludes our presentation.